All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is March the 5th, 2025, year of our Lord. And man, it was another volatile day in the market. We'll be discussing the Dow Jones, the S&P 500, the NASDAQ, and I'm going to take a look at gold and see kind of how it behaved as well. We don't have pre-market plans for everything, but we got pre-market plans for 2 out of the 4 instruments. Plus, you guys, at this point, if you don't know, go back and watch the charting videos. Like, you should understand kind of the way that I'm looking at the market by now, right? Like, you should pretty much get it, right? I do the same thing essentially every single day, right? And that right there alone is like putting you on the next level, right? When you come to the market and you see the market the exact same way and you do the exact same things, that just helps you build consistency. But anyway, let's get right into it. So the Dow Jones, the current conditions, we were in the markdown phase, okay? We were bearish as long as we stayed below 358, which we did, right? We were bullish as long as we stayed above 41978, which was down here, which we did, right? I said bears still continue to try to take out November 4th's low, but have still been unsuccessful, right? We are in major discount. I put it in bold capital letters. We are in major discount territory. And if the low of 41978 does not get taken, this will be a great day to spot a potential reversal of order flow. Okay. And then I put, however, bears still have the wheel. I meant WHEEL. And if we break through the previous day low, the selling will continue toward the ADR of 1.54%. Now, this was the previous day low right here at 42,424. What happened when we came near it? We refused to break it, right? That's exactly what I wrote in my macro. So if we're looking at the range, we were looking at the lows of 42,706 to 42,479. 479 was where the lowest point of my range was. The low of the day was 474, right? So we basically got you within 5 points because we're just reading the market for what it is, right? The high, 43,156 to 42,933. You see, we went all the way up to 933, right? Or 43,156. And then we pushed right to our area where we were looking to short the market at 43,204. The high of the day so far was 43,196. So we got you within 8 points of the high and 4 points of the low, right? Like, that is excellent price action reading or analysis, right? That's excellent. I'm not trying to toot my horn. I'm just trying to show you that, like, the market is not random, right? Like, it's doing the same shit every day. You just got to be in the right spot. Our area that we were looking for longs, I knew that this was a low probability of us going here just because I was anticipating this being the low, right? So we didn't really come back down to the demand zone, but we basically, all the price action happened inside of yesterday's PM session. So let's drop down to the lower time frames and we'll review kind of how price was delivered on the day. We'll start with the 15-minute time frame and then work our way down from there, right? We come over to the 15-minute, right? And we go over to the left, right? This is important, right? Because if we turned on the macros, I'm not going to yet, right? I mean, the macros are on, but let's just talk about yesterday, right? Whenever you're looking to do anything, okay, you need to pay attention to what the market did the day before, the session before, right? Like maybe anything before. Don't always look at what price is doing right now. Some of you guys, you get tunnel vision, right? You blow this up and you're only looking at this much price action. Well, from here it's like, oh, okay, I'm gonna go short. But if you zoom out, it's like, you sure? Right? You sure? I mean, it's a good area, but are you sure though? Right? Like maybe wait for the longs, right? Or whatever. Point being is you need to have context. That context is gonna come from what price did the day before, the night before, the session before, right? It's important to note these things inside of your trading. So that being said, what did we do yesterday? The low was put in at 1 o'clock, right? Or not the low, but the low of the dealing range was put in at 11:30 or 11:15. That's the previous day low at 42,424. That's number one. What did this low do? Well, this was the previous high at 695. This low took out all of these highs, right? and traded all the way back up to this high. Did it take it out? No. Does that mean we're not bullish? No. What it means is we're very much bullish until this low gets broken. Hence my macro analogy of if the previous day low gets taken, meaning we close below it, then expect more downside. If we don't take out this previous day low, then that means we're in bullish character. All right. Number two things to note: the PM session went up and came down and dipped right down into this low, creating a very, very strong wick to the downside. Back up to the upside. That's telling us these buyers that bought here at 11.15 were willing to defend again at 3.45. Were they strong enough to take out the high? Nope, not yet. Instead, they did something very similar to what the market did yesterday. And this is what I was trying to illustrate to you guys this morning when I said, you see what the market did yesterday. We dropped down in at 330 and then we consolidated before dropping lower. The market did the same image, except this time when we dropped down, we actually took back over a high. See how there was no high established here? So there was no high to be taken. The market needed to come down and develop a new low, right? And a new high. Once it did that, it gave you the same consolidation going from Tokyo into London, where London brings the quote unquote high of the day. Newsflash, I've been watching this for at least 2 weeks, so take my advice as a grain of salt or don't, right? Here's what I'll tell you about London bringing the higher to low. It works more times than it doesn't, but you need to understand the context of the market when it's not going to work. Today, I knew it wasn't going to work because I've been studying this, and what I found was when we're in consolidation in preparation for a reversal, then the London highs, New York is targeting that shit. And they usually target it inside of a PM session because theoretically that's a brand new session. So now we can go above London's high without even worrying about breaking that rule, right? Because it's technically a new session. We're setting up for tomorrow's price action, right? So that's exactly what they did. They consolidated, they brought it down inside of 950, right? They consolidated and smoked everybody that was making free money, right? I call it free money because when we're in expansion, all of a sudden, everybody's the best trader in the world, right? Let's come down to the 5 minute, get a closer look. But inside of the expansion, everybody's the best trader. Man, I made 30K this in 2 days. You better walk away, right? I made 15,000 just today. It's like, okay, cool, right? But can you duplicate that when the market turns into a ranging area? Can you stay out of the market or have a system that's going to keep you entering the trades the same way, whether we're expanding, whether we're consolidating, whether it doesn't matter what the conditions are, your system should be the same. A lot of people's system is buy this shit as it's pushing up, sell this shit as it's pushing down. And that system will not work every day, especially when the market decides to pull into a range such as this one, right? So let's identify what's happening in this range. First of all, we already know we already have our where. I trade by 3 W's: where, when, and why, right? My where is always going to be these big white boxes or supply and demand, previous day lows, right? All of that. In this situation, my where was the big white box. I didn't even trade the Dow Jones, right? I traded the S&P 500, but I make a plan for everything. I just pick and choose which one I want to drop into the chat, right? So 929.30, what are we looking for? If I want to go long, there's a 0% chance I'm looking for the market. I'm looking to short the market down here at all, like no chance, okay? So if I want to go long, my entry criteria is inside of 929.30 on the Dow. If I was trading the Dow, I would have been long at 929.30. For the S&P 500, I had to wait a little longer because the development just wasn't there. The delivery wasn't there. And I'll show you the difference. But if I'm trading the Dow, 929.30, 925, I'm long right off 930. I just need the market to trade down back into this doji candle, and I'm long targeting these highs up here, right? I mean, this is, what is this? This is a 300-point move right here. 300 points. You're done. You don't need to do nothing else. But let's just say you wanted to be patient and wait. You said, nope, I want to get long, but I need the sequence to start over again. That's what I've been doing. I've been being very patient and allowing the sequence to start over to the point where I'm ready to trade. What does that mean? The sequence is simple. Don't nuke it. As we're trading down from 645, we're making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until finally we make this last low, and then boom, we get above 42,632. That's all I need to see. Am I getting long right here? Nope. Am I getting long up here? Nope. Am I focused on these shorts? Nope. Am I getting long right here? Nope. Right? I'm ignoring all of this price action, right? And yes, you can make money. I could short this shit back down to where I wanted to go. Absolutely. But I'm just being patient, right? What am I waiting for? I'm waiting for 920's candle to be retested in some form of fashion. Multiple ways it could be retested. We could run the low. We could hold the high, right? We could bounce off of it and go right back up. But the second price comes into this realm, right? Anywhere in this candle, right? Let me reiterate, right? I want to make sure you guys get this, right? Because it needs to stick. Because a lot of you guys, like, sometimes anyway, I'm just going to say what I got to say. All right. So if you draw this box on this candle, anything below this candle is bullish character. It's bullish character. It's a lie, right? If you think that the market broke this high, right, to come down here and take out these lows and go lower, you just don't understand the sequence of a reversal, okay? I'm telling you right now, when the market stabs through these lows, I don't give a shit how low it goes, right? Unless it closes below the previous day low. At this point, you buy everything inside of 1125. That's a sell candle, right? So anyway, we get 1125, we trade down into 1125, and on the Dow Jones, this is my favorite macro. Like between 1025 and 1125, like these are like my favorites, right? If you just wait for this macro to come down into these lows, you shouldn't be buying when it starts pushing up at 561. You shouldn't be buying when it's pushing out at 603. You should be buying when these big black ass candles are stabbing into the lows, because that's where you're gonna get the most bang for your buck. That's where price, right? That's where price is at the best price. It's not gonna be when the buyers are buying. It's gonna be when the sellers are selling, if you're looking to reverse the market the proper way. Right? I can't enforce that enough. But anyway, if you wanted to wait for the official macro, the 1150 1210 macro could not have played out any better. It swept the lows of this consolidation, manipulated down. Your entry was right here at 478. Anywhere in this candle is good money. And then we just freaking took the F off, like gone. And where did we go? Right to the top of the range, breaking the previous day high, indicating we probably are getting ready to trade higher going into tomorrow, which I'm completely okay with, right? Damn near hitting our supply zone on the money. So if you took any trades in this, man, like I'm telling you, the pre-market plan was sauce today. Super duper sauce. All right. So let's move on to the S&P 500. Again, Justin had a fire ass plan, right? He had a fire ass plan for the S&P 500. His ass didn't follow it, right? But he had a fire ass plan. That's okay to fuck up and not follow it. It's not okay to continue to do it, right? So hopefully tomorrow we can get back on track. Everybody just do what the fuck you wrote. Like if you write down a plan, like try to trade that plan by any means necessary, right? Like that's important, right? 30-minute demand is what he said, right? He was looking for 62.75. So he's looking for 62.75 through roughly about 57.44. Like the market low was basically, I mean, right in his level, right in his lap. He missed it by about 12 points, the low of the day. And I'm gonna show you guys like exactly why and how I took this specific trade, right? Now, I had this level for different reasons. I had it as the low of my chessboard on the ES. So I was just like, okay, well, come on down here. Like I'm looking to get long, right? And a lot of people ask me like, yo, how'd you get that entry? Because I got long at 53, right? Now, the way you get the entry is one thing, but you just have to trust it, right? Once you get it. And honestly, like I'm saying this, but I didn't trust it when it went to where I wanted it to go. And I'm gonna explain that later. But so if we follow price and time, right? 950, I took this trade off 950. I got long on Top Step, finished the day on a combine, funded it. done for the day on Top Step. I didn't even trade my funded. Then we came down. We kept coming down. I took a couple longs inside of this choppiness because I'm human, right? Knowing that we were about to reverse, but because I was inside of my Apex account, I was just taking paper cut losses because I didn't want to lose big. Paper cut losses ended up bringing me down on the day, right? Inside of the Apex account, but I wasn't tripping. Like, it didn't bother me because I knew the market was about to reverse. I wasn't going to take shorts down here. Then I just slowed down, took a second, and I said, okay, where's the next hourly candle ending? Meaning, where is the next macro? That's all a macro is, in my opinion. It's the last 10 minutes and the first 10 minutes of the next hour candle. Basically, this 1050 candle didn't bring us back up. So let's see what 1150, the next 1 hour candle, does, considering it's so close to the previous day low. So my criteria is met here. My where is the bottom of the chessboard, previous day low, right? My why, I'm about to share with you my why right now, right? On the 1 minute, right? It's the same thing that I just talked about on the Dow Jones. Higher or lower highs, lower lows, lower highs, lower lows, right? We keep making lower highs and lower lows until finally we make a low, and then boom, we take out and put in a high. The second I saw this 1 minute candle, I said, please just come back in and retest the CE of this wick. That's all I wanted, right? You could have just taken a candle or a box and draw it right there. That's the first time the market made a new high, right? So now I'm like, okay, bet. Now I just need to see you make a new low. The second it came down here and made a new low, I got long 57.53, right? And the price just fucking rocket ship inside of 1150, right? Now, all I needed to do to fund this Apex account, right? All I needed to do was hold to 58.10. And when I tell you this was the hardest hold of my life, because the market hit 20K at one point, because I think like I held and I cut one, so I needed to hold longer, right? And then the market hit 20K, and then I don't know, I freaked and I couldn't hit exit and clear soon enough. And I ended up selling it before I got to the 20K, but it's okay. I left myself a small cushion of money that I got to make tomorrow. That's neither here nor there. Let's get back to the review. So if we go inside of 1150 and we trade down that first candle, depending on where we are, the delivery of price is ready. We're primed, right? We've been priming the buyers since back here, or we've been priming the market to go higher since back here, right? Like this low brought this new high up here, right? And all we needed to do was sweep down, okay? So once we swept down, it was game time. Now, if you missed this low entry at 1150, don't fret, my boy. Don't fret. The market is gonna give you another opportunity to get in, okay? It always does. So 1230, you don't like that entry, chill. Wait till 110, because 110, 140 is gonna be the start of a new session, right? PM session starts at 1:30, right? If you start to see the market trade down into this macro here, right, inside of 1:30, and we're in an uptrend, oh my, I wish I was here for this trade, right? Because I would have definitely taken this trade for, all I needed was like 8 points, right? This was easy money, man. Like, again, your 3 W's, right? Your where, your when, and your why. Where is your where? Well, when was the last time the market put in a new high? It was off these lows right here at 1247. The market puts in a new high, and then it does this consolidation dance that most people go long, short, they tilt it, they getting fucking spanked inside of this shit. Don't trade that, right? Don't trade that. If there's no clear direction, don't put a trade on. That's it. Let the market come back to the extremes. Identify the extremes, and then let the market come back to it, and you could trade it, right? Once the market comes back into this, what time does it do it? You think it's a coincidence that the shit came down here at 132? No, it's not. It's going to do the same thing tomorrow, and we're going to be having the same conversation tomorrow. The sooner you can realize that the market moves on time and structure, and it does the same shit every day, the better off you'll be at trading. I promise you. You just got to trust it. But anyway, 130 pushes us down. We ended up pushing right back up into the in wall. Coincidence? I think not, right? The market comes back into the in wall. 315 pushes us down, pushes us back up, and then just kind of trades sideways, maybe looking for a retrace back into this 5806 level before we go higher tomorrow. That was the S&P 500. Let's move over to the NASDAQ. I'll go over it briefly, only because it was delivered about the same way and nobody really makes a pre-market plan for it. But I'm going to tell you a couple things about the NASDAQ, right? The NASDAQ today was probably the best instrument to trade, to be honest, right? For the way that I trade and the charting that I had on it. Because, man, when I went back and reviewed this thing, I said, bro, this is crazy. Okay. So let me start by saying every week I do a weekly projection to the bearish side, right? And what that does is that tells me like, okay, this is the weekly projection for the week. Well, the NASDAQ was there on fucking Monday and Tuesday. That level was 20,261 from the weekly fib. And then the second one was 20,069 from the top of the range. If I be damned, if I was to take a box between that line and this line, not only does it line up with the low from yesterday, but it literally is right between these two lines. And all the NASDAQ did was tap right back into the fucking weekly projection. When I saw this, I said, bro, you gotta be kidding me. Like, this is super duper sauce. Now, how do you have these levels? It's simple. If you watch my chessboard video, I promise you, you will be prepared for this, right? You will be prepared for this. All you have to do is watch it, back test it, and trust it, okay? The market trades down. Let's turn the macro zone so I can illustrate what time we came down here. Let's go down to the 1 minute, right? And we come down here, right? There's a one more thing I want to show you too, Alex, since you're in here. So we look over here, right? Like when the day starts 9:20, 9:30, I'm not doing nothing because we just kind of coasting up right here. Like I need to see expansion, right? We drop down outside of the macro. I'm still not doing nothing because I don't trade outside of the macros. We trade down into 950, go time. That's a long. What's your target? These highs right here. Why? Because the market, this will be the first time the market's making a new high. Or you can sit on your hands and do nothing. You can take this next long, but understanding if the market just changed character, it's going to take out this low, right? So you can take these longs, but you need to understand that they're just generating liquidity to take out this low right here, okay? Because that's how the market creates a new dealing range. Now the new dealing range is established. We have 497 as the high and 222 as the low. Now it's time to be ball game. This is a new dealing range, but it's a bullish range. So what's the goal of these lows down here? To take out this high right here at New York AM. What is the Dow? Where is it going to do it? Our 3 W's. Our where, yellow box, right? That's your where. Our why, right? We just changed character to the upside. The market switched above the high. Now we swept the low. Now I'm looking to get long. My win, 1150 macro. Like you can't write this any better. The 1150 macro taps into the CE of the 1146 candle at 1150. You buy this candle and you put your stop below this candle. That's it. That's it. You buy it when it's coming down to sell. That's when you buy it at 1150 because you're not randomly buying a candle. You're buying a candle that matches your entry criteria. It's met your 3 W's and right at 1150, it's retesting the high that it just, or the low that it just made, right? That's a buy, okay? And what does that NASDAQ do from there? Rally, goes straight to the highs here, holds support, gets back into our chessboard, and you already know what to do inside the chessboard. Longs here, 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 or here, all good money, because now we're back inside the chessboard, and we should be targeting where? Right up to the high of the chessboard. Easy money today on the NASDAQ, right? Let's move over to gold, and then we'll get you guys out of here real quick. So what did I say about gold today? I specifically said, hey, if you took the shorts in the morning, you're good money, but stand by because gold is about to tap into the weekly fib, right? And gold is very, very bullish. I said from here, you can look for a rally back into the top of this box. Why do I say that? Because gold is trying to change character to the downside, but before it does, it needs to create a new dealing range. Well, the previous dealing range was from here to here, right? The market came back up, it failed, and then came back down and targeted these lows. But you know what it didn't do? It didn't take out these lows at 29.05. Therefore, we go back up and try it again because maybe we needed to go higher to start selling, right? I don't know when gold's going to sell off, but I can tell you right now, it's looking like it's trying to develop a sequence to come down a little bit, right? How far? Who knows? Gold is very, very sporadic, but not sporadic, but it moves in large in large waves, right? So that's exactly what we got, right? Inside of 920, 930, we traded down at 915, pushed right up to target, and then you got this stupid ass candle at 10 o'clock. But other than that, right up to the target, right up to 29.39, and then it ended up selling back down. So gold was very, very clean as well. And then last but not least, I'll talk about the volatility index in preparation for tomorrow. We talked about potentially consolidating today and starting to push back up before NFP. That's exactly what we got. But looking at the volatility index still holding above the 20s is a good sign. We talked about us rejecting up here at 21.5. We did exactly that, and we started to push down. Now, if you're a bull, you want to see us continue to dump and head back towards 17. If you're a bear, you want to see this entire range hold right here, right? Somewhere in here, you want to see price come back down into these lows, right? At 19,215, something like that. Maybe tomorrow, right? We're in formation to start trading up. So if we're going to trade up, that's fine. But I do not want to see the VIX get below 18.4. If that's the case, I'm going to view the price action moving forward as a complete reversal, and we're going to start dumping, and we're going to start dumping fast. So ultimately, I want to see the VIX get back above 23 by the week's end. But if we start trading back below 18, it's over with. Like, this was just a bear trap. So we'll see exactly how it plays out. Stay tuned, or pay attention to the pre-market plan and come in before the trading session, because we'll go over a lot of that. That being said, this is the market review. My name is T. Hobbs. We'll catch you on the next one, man. Peace.